Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bearish scenario where we're looking for a move to the downside in an ABC or a WXY. In an ABC, we're looking for a wave A, corrective structure in a B, double zigzag, and then a wave C to the downside where we want to see an impulsive structure where the most common target for wave C is between the 1 and the 1.236, which is between 39.7k and 38.6k, which also includes this golden support box over here, which is very nice, sitting between 38.6k and 39k. In a WXY scenario, we're looking for a flat structure in wave W, double zigzag in wave X, and then we're looking for a wave Y to the downside. Because wave W is then labeled a flat, wave Y can be a flat zigzag or a triangle. So we're going to either be looking for a bigger zigzag to the downside, a flat structure, or a triangle, and it is too early to call what we get at the moment. But for a wave Y, the common target area is a little bit bigger. It is between the 0.618 and the 1.236. Now also for a wave Y, the most common target area is usually the 1 to the 1.236, with the 0.618 being common at 41.4k. After this move to the downside, we then want to see continuation back towards the upside. If we look into this wave B or potential wave X, there is two counts that I have over here which could lead to a move towards the downside. The first one here is a double zigzag, ABC and then a W, complex structure in X, and then another ABC to the upside in a wave Y. Most common target again then here for wave Y between the 1 and the 1.236 at the moment respected. What is not so nice, however, is two things. First of all, this wave X retraced very deep for a sharp double zigzag. Usually in a double zigzag, wave X should not go below the 0.7, so seeing this lowers the probabilities a bit for this particular scenario. And also if we are looking for another zigzag to the upside in wave Y over here, then the most common target area for a wave C is between the 1 and the 1.236, which is up here. And the 0.618 is a rare target for a wave C, but you can see the common target is not hit. By the way, fibs taken from the low to the high of A to the low of B. So that is also lowering the probabilities a bit for this particular scenario. The other scenario would be a flat structure where we are then looking for the bigger three-wave structure, and then inside B or X, we're looking for a flat and then a wave A, B, and then a wave C over here. Now in this particular scenario, wave B just missed out on hitting the 0.9 Fibonacci taken from the low to the high. I do realize on some other charts it did hit the 0.9, which is a minimum requirement for a flat and actually something you like to see. So it's not invalidated per se because other charts have hit it, it's just not that nice. Now in this scenario, we are then looking for a wave 1, 2, 3, sideways 4, and one more push to the upside for wave 5. But what you can see is that the invalidation is very close at 44.7k, and I do think if we go up once more and take the highs over here for a wave 5, probabilities are very high. We're going to take this high as well and then invalidate this scenario where we are looking for this bigger three-wave structure. Now if we then look at a other bearish scenario over here, we're looking for another three-wave structure over here, but in this case it is possible to take the highs of the range before then a move towards the downside. Here we are looking for, in gold, a wave A, B, and then a wave C, and in blue another WXY. But now both wave A and W are corrective three-wave structures. Now for a wave B over here, it is important that this is the high, because for a wave B, you don't want to have an internal wave B. And what I mean about this, or sorry, for a flat, you don't want to have another flat inside wave B. Now what I mean is that if we are looking for an A, B, and a wave C, then this wave B over here can be a double zigzag, that is no problem, or a single zigzag here, that is no problem, but you don't want it to be an A, B, C flat structure with then a 5-wave move in wave C ending somewhere here, because a flat inside a wave B of a bigger flat structure is incredibly rare and lowers the probabilities that we're going to have a flat structure. And that is the reason why the target area over here, the blue box above the 0.9, is blue, because then we have to think about a potential W, X, and then a Y. inside the WXY, it is no problem that X could be a flat over here, and then we're looking for a Y to the downside, which then again is either a flat zigzag or a triangle, and for wave C we would be looking for an impulse to the downside. Now if we then again zoom into this wave B over here, right, then for this wave B, a single zigzag, no problem. Double zigzag over here, also no problem. I already explained the probabilities for the double zigzag, right? But you want this wave B to end over here. Going above this high increases probabilities for a wave X instead of a B, which means increasing probabilities for a wave Y to the downside instead of a wave C. And if we're looking for a WXY, then inside wave X it is possible to have an ABC flat structure with then a 1, 2, 3, 4, 5 finishing impulsive ending diagonal over here in a wave C, ending X before then a move to the downside. Now the invalidation for this scenario is currently, at least, if price would go above the 1-to-1, which is sitting over here at 45.8k. So if price would move towards the upside now, we don't want to see 45.8k hit. If it is hit, then we are going to think about other structures instead of a diagonal, because wave 5 in a contracting diagonal is not allowed to be longer than wave 3. The target area for a wave 4 in a diagonal is between the 0.382 and the golden pocket most commonly, and the 786, 886 being rare. As you can see, the 382 over here is currently acting as support. Even if price moves a little bit further to the downside, that's no problem. But in this scenario, we want to see a move to the upside. Now, in the bullish scenario, we are already finished over here, and we are looking for the beginning of a bigger impulsive structure. Here we are then looking for a 1, 2, 3, 4, potentially a 5. Then we're looking for a retracement in a 2 and continuation to the upside in a wave 3. So now this diagonal becomes a leading diagonal. Target area for a wave 4 is exactly the same. Invalidation for wave 5, 45.8k, is exactly the same as well. And after this wave 5, we then want to see a sharper correction to the downside in a wave 2. Now at the moment, as long as the highs here are not taken, the invalidation is price hitting this level over here at 41.7k, because a wave 4 is not allowed to take the low of this wave 2. Now what is interesting is that in a diagonal structure, preferably, volume moves to the downside instead of volume moving to the upside. And we do see volume is moving to the upside. So if price moves to the upside and hits 45.8k, we might actually be in an impulse to the upside instead of a diagonal, where we're then going to be looking for potential 1, 2, 1, 2 and continuation to the upside. If we look at the range, then you can see the daily here twice acting as resistance, hovering around that value area high over here of this range. Support areas are the daily point of control, daily and daily naked point of control that you can see over here on the right side of the chart. If we look at the CVD divergences, then we have both bearish and bullish CVD divergences on the chart, and we also still have the bullish CVD divergence over here, but locally it's very mixed. Price does move to the downside over here with small bearish CVD divergences that I can show you here on the chart as well. So we had over here lower highs on price, higher high on the yellow line, that is a bearish CVD, and also here lower high on price, higher high on yellow over here, which is also a bearish CVD divergence. But as you can see, it is pretty mixed, so we can't really use the CVD at the moment unless price either takes this low with the bearish CVD divergences playing out, or price moves up and takes the high. If we then finally look at the probabilities of the different scenarios, then currently on the low time frame we can expect a retracement at a given moment in time, either in the ABC WXY scenario, where we are expecting a move to the downside, the lows to be taken potentially. If price moves to the downside directly, then the lows over here become interesting, as well as the golden box as mentioned. And if we get one more push to the upside, then we could either be looking for a potential wave 2 or a wave Y if we get a drop. Now on the micro over here, the probabilities are higher to actually take these highs, also because of the 886 touches that we have over here. If you take a fib from this high to the low, and you toggle on the 886, then you can see that the 886 has been touched twice over here, and that really increases the probabilities to take these highs, and therefore also increases probabilities to take this high. Also, even more locally, if you take a fib from this high to the low that we have here and drag it to the right, you can see that also here we have touched the 886 multiple times, increasing probabilities. A move to the downside is a wave C or a wave Y, which increases probabilities for price to return towards the upside and again take the highs. Now, it is quite common after an 886 touch to retest or move towards the golden pocket, potentially find support and move to the upside. If price loses this support and this order block here as well, we can be looking for lower prices. But on the micro, the probabilities based on this 886 knowledge, Elliott Wave knowledge as well, is higher for a move to the upside. And of course, yes, we might be looking for a retracement, but we want to see weakness. So if price moves above the highs over here, we want to see proof of resistance. If we get a big push, there is no reason to go into shorts or look for shorts, right? What I would be looking for myself is I want to look for a rejection, or I want to look for a bit of a range to form. And after we get a bit of a range, then we can assess the probabilities once more. We got resistance over here. We know what to look for in case of a potential wave 5. 45.8 is the invalidation, right? So if price would move to the upside, we are patient traders. We have a plan. We have entry requirements. We observe the reaction. And we're not going to think, oh, we go down, right? We want to wait for proof of resistance, and based on your plan, you can go for potential longs or shorts, of course. Now, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye-bye.